Gave up managing billions to become a better investor. Episode 27. Large caps are never boring. Hello. Yes, we're in the middle still of earnings season, getting more towards the end of it now. I think probably over 80% of the earnings season done, but it's still exciting and there's still loads happening. I mean, I could have filled this podcast with thoughts about Tyson Foods in the States, the world of protein and more, intercontinental hotels, obviously about matters of travel and business and related to hotels, or even China Telecom and the discussions about mobile, 5G, cloud and related, all interesting companies. One of them's interesting. The other two I think are sort of fairish value, but nevertheless interesting names to listen to and think about and everything else, and gives some very good global insights from it all. But actually, there's other things happening, and actually more things than I thought. I thought I was going to talk about Novo Nordisk a bit later on in the week. I mean, the world of Novo Nordisk, Danish company, obviously material in an important position in matters around diabetes and more recently with weight loss matters and related concerns. Fascinating company, numbers out on Thursday, but actually gave a special announcement earlier today, which talked about some of the aforementioned weight loss phase 3 progress, which pushed the shares up materially. Interestingly, their great peer, Eli Lilly, again got good positions in growing positions in diabetes, development scope in weight loss products as well. But also, as you may have read in the press over recent times, actually some very good potential, huge potential with things like Alzheimer's. Very sad, big impact, just like diabetes, on many people around the world. So interesting to see what the company was saying. I mean, for what it's worth, Novo Nordisk, which is full mention, is a company that I do own, company that I've liked for many years actually. And I really was going to do a full review on it after Thursday's numbers, really. But no surprise to see their shares up sharply today, and also kind of given their updates and their comments, no surprise to see, no great surprise to see Eli Lilly's shares also up strongly today. The reality is, though, for investors is what is fair value, what is cheap, what is expensive. I'm still struggling with Eli Lilly share price. Again, had another strong performance, but I'm struggling with the shares. Novo Nordisk has now gone to levels above my personal target. I've probably got to adjust the numbers, aided probably by the insights from their full set of numbers on Thursday. But like anything, companies can be doing a great job, making progress, but the question is what is factored in. That is always the key. By contrast, I'm always more interested in companies where things perhaps are not going fabulously or wonderfully, but too much negativity is priced in, and that's where the opportunity comes. A turn is coming, an improvement is going to occur over the next year or two, but nothing like that is factored in. And it's interesting. I was listening also today, and you can see it was a busy day for lots of interesting corporate earnings updates and conference calls and the like with Bayer. You may pronounce it differently. German listed, operative obviously in crop pharma, consumer healthcare and related areas. Very interesting company. I've not owned the shares for many, many years. To be honest, I was actually quite a big fan, particularly of the crop science and related space, crop science, seeds, and related space. My historic favourite was always Monsanto, but that actually got taken over about 5 or 6 years ago. Bayer was always had a big a big global peer in that sense, albeit that they had, as I mentioned already, a broader range of areas and skills. And when they bought the business of Monsanto, versus Syngenta versus Monsanto, I mean, honestly, it felt like a silly move. Syngenta, I always thought, was a high quality business, and I was disappointed with him when they got taken over, albeit at a very good share price. Monsanto, by contrast, I regarded as a business with great history, but some issues and concerns. And actually, that's been very apparent over the last few years, in years after Bayer bought the company. Kind of interesting to see listened to the buyer conference call today, and fascinating, I think, actually, that change is really occurring there, or at least attempted to being applied there over the next year or so. A new CEO, as always, change comes. That change may be good or bad, of course, over time. But it struck me that if I was the CEO, the newish CEO, very new CEO of Bayer, I would probably split the company up. I mean, frankly, when I see a company with pretty good exposures in crop, pharma, and consumer health, I would actually be doing what GSK did, which was split the business up. I think it makes sense. We'll see whether that's true or not. All I do know is at 50, I think it's about 52 euros, the share price. I'm doing some quick running through the numbers and related, kind of interesting to me. So one to be taking a look at and thinking a bit more about for the first time, as I said, in a number of years. As I say, too many other opportunities and potentials out there. But that was one of the more interesting ones from looking at today's numbers. Certainly one which I didn't feel, unlike, let's say, certainly I would feel personally the Eli Lilly's, and potentially even the Novo Nordisk been a long-term attractive share to me, kind of factored in. But Bayer, I'm not sure that is the case now. And actually, I wonder whether in a couple of years' time, you could actually do quite well on the share. Again, it shows that large caps are never boring, or larger caps are never boring. There's always interesting stuff going on with them. Final stock, and the stock actually, which I was really looking forward to the most today, was Barrick Gold, as some people still know it as, which is always a fascinating company to listen to, not just because they operate 5 of the top 10 gold mines in the world, not that they've got activities in the Americas, in Africa, and progressively have growth scope across Asia too. Not because they speak correctly about the importance of strong balance sheets and having a focus on developing internal product rather than just buying stuff in. High grade's always so important in matters such as gold mining, but also they're developing copper skills as well in various parts of Africa and some other parts of the world too. But it's kind of interesting reading or listening again to a company which is I've regarded very positively for quite a very long time now, actually. Before Barrick Gold, Barrick bought Randgold's business and sensibly brought in their management team in as well to run their broader, bigger business. And I was a big Randgold shareholder and a big fan of the team there, and that's remained the case over the last 4 years or so since they've taken over the broader Barrick Gold business. So fascinating conference call for them. Again, very informative, very interesting. You know, it's a company which I would still regard as being very good and attractive for investors. And we're coming back, as I said on a previous podcast, to the notion that gold and gold-facing assets, and I know Barrick Gold is an equity, it's a share, it's slightly different from holding gold per se. But nevertheless, obviously the exposure with the gold story, particularly when you have what I would regard as a well-run mining company, that there's a difference in the performance profile. It's something which I picked up first actually during the global financial crisis of 2007 to 2009, and the importance during my days as an institutional investor of having decent exposure to true alternatives like gold-facing assets, and that worked really well. And since then, I've always taken the view that, as I've shared on previous podcasts, that having a 10% plus gold exposure makes sense to me as a personal pension fund holder. A key important of that is Barrick Gold. Yes, you'll discuss whether that's a share or a gold holding or a bit of both. But again, listening to today's conference call and working through some of the numbers and thinking about everything, still a company I would regard as good value. So I guess what I'm trying to say in this brief, fortunately for once, brief podcast is that world of large caps is never boring. It's kind of interesting at multiple levels, and kind of fascinating over the last couple of business days to see a bunch of interesting names across different geographies, themselves often very inherently global businesses, some doing very well, some with perhaps scope for turnaround, some perhaps now being fully valued or more akin to fair value levels. But that's the wonderful word about investments. Even though a company might be big, it might be well covered, it might be even held by many big global institutional investors and hence the average person's pension fund indirectly, that doesn't mean there isn't value or opportunity or overvaluation, to put it around the other way. That's the fascinating thing about investment. And this is where this importance of research, of understanding, of not just following what the headlines are telling you, not even if it's the quarterly earnings season headlines. I mean, there's so much more in an investment than just what the immediate did it beat or miss sort of instinct is. And that's the wonderful word about the world of investments. It's fascinating, it's tricky, it's interesting, it's changeable. And on that basis, still makes me kind of feel very excited. And even though we're deep into now week 5 of the corporate earnings season, we're starting to get more towards the end of it. And it's been exhausting and kind of tricky, but interesting at many levels. There's still huge motivation to get involved and to keep on looking at stuff. So hopefully a relatively quick podcast for once. A few more interesting days to come up this week. Loads of interesting numbers coming up Wednesday, Thursday, and even a little bit on Friday too. I'll put those together, some sort of thoughts and anything other of a relevant nature on a podcast on Saturday morning. So look forward to speaking to you then. But thanks very much for listening. And as always, any further thoughts, comments, questions, etc., just send me a message, be it via Twitter, email, or whatever suits you really. Thanks very much, and bye-bye.